Welcome back to fundmanagers.com Meet the Manager series. I'm joined today by Paul Harding-Davis, who's the Chief Executive Officer for Premium China Funds Management. Paul, thanks for coming on.
Yeah, thanks for having me. I've been looking forward to this conversation.
Paul, a week or so ago, you penned an article for us that was talking about the premise that is or are investments in emerging markets from a portfolio allocation point of view past their use by date. I'd like to spend a bit of time talking about that today, if possible. Do you want to give us sort of a basic overview of what we're talking about in that situation?
Sure. This all started when I asked myself the question about emerging market funds, because a lot of portfolios have an allocation to emerging market funds. And we look after Asian and China funds, both equity and debt, which is, if you like, the next step down inside emerging market funds. And so I wondered about the difference between the two and just how much of emerging market funds was the Asia ex-Japan portion. And that led to experimenting with some numbers, and came out with some interesting conclusions, which I've broken into a couple of parts. One, just setting the scene for emerging markets, and two, then how has that resulted in performance, and what difference has it made?
So give us a bit of a feel for particularly that setting of the scene regarding emerging markets. What are they looking like now?
There's a definition of emerging markets or a framework that I'm looking at, which has 5 criteria. Lower than average per capita income for the people. And the World Bank defines that as $3,995 or less per annum. Brisk economic growth, high volatility, currency swings, and a strong potential for growth, which is, of course, why there's attraction to investing in emerging markets at any time. Now, we would contend one thing, and in that article, there's a table that references the biggest countries there. And I think it's fair to argue that according to those frameworks, they've pretty much moved beyond emerging to being the early stage developed markets, China in particular. The second thing is when you break down the indexes, particularly the most common one, the MSCI index for emerging markets, and then compare it to Asia ex-Japan, what you find is a surprising conclusion that emerging markets are almost entirely Asia ex-Japan countries. So then you say, well, which countries are different? And let's talk about those. And you find that that may not be the ideal set of countries that you want to be invested in, or is an emerging market fund even the best way to go about it? So it generated some questions which were interesting to unpack and go through in the article.
So I guess the idea for most people when it comes to emerging markets is that ideal that they're looking for those countries that have got that stellar growth. And I think there's always been this view, particularly countries that are emerging, the likes of Brazil and quite a few others, the BRICS spring to mind, have always been a place to go. I think, is it right in saying that a lot of people might particularly look at something like China and not really realise that it's still part of the emerging market space?
Well, it wouldn't surprise me if that were the case, because I think people are seeing China now as, if you like, the country that's jockeying for superpower status with the United States. And our view on that is that those geopolitical superpower contests have been going on for as long as I've been alive and are going to continue for probably the rest of this century. And that's not what we're about. We're about looking into the good companies in those countries to try and make money for our investors and to improve their outcomes. But if we just look at emerging markets, 75% of the Morgan Stanley Capital Morgan Stanley Capital Index, emerging markets in US dollars, is 4 countries: China, Taiwan, Korea, and India. Those 4 countries are make up almost everything that matters in the returns in the emerging market funds. The next four are Brazil, which you mentioned earlier, South Africa, Russia, and Saudi Arabia. Now, those four, in our view, have four things in common. They're commodity countries, so particularly commodity speculation, and they all have questionable governance and or human rights issues in their own right. That leaves 11% remaining from the emerging market index, and that's 19 different countries. But basically, they're all rounding errors. So you're really faced with Asia ex-Japan, four countries that I think most people would only want to be in every now and then as a speculator, and some very small countries. It already is the case that an investment in an emerging market fund is largely an investment in Asia ex-Japan.
That said, I mean, if you look at the Australian equity market as an example over the last, certainly over the last 2 years, smaller company stocks that make up less of the index have done particularly well.
Yes.
Are you in a situation with, not investing in things like South Africa, Saudi Arabia, or Brazil, that you're missing out on an opportunity in particularly growth in resources and those sorts of things, which those countries are have a lot of exposure to?
Yeah. Great question. Two parts to the answer to that. One is that we think there are those opportunities there, but we think you're better off accessing them via specialist manager. Find a global resources manager or commodities specialist that really knows that those countries, but more importantly, the resources and commodity companies that are the main drivers there. Similarly, we think that having a specialist in Asia and particularly Greater China is important as well, because the markets there are still inefficient, which means there's great opportunity to do better than just an index return. And the second thing is that in the article, it's easier to look at the performance chart over a long, well, since the inception, for example, of our fund. So you've got a comparison. Over that period from November 2009 to about April this year, the worst performing country in that index was Brazil. The second worst country was in fact, it's a close finish between Russia and South Africa, who correlate very closely, not surprisingly, given that they're such strong resource countries. And if you look at the MSCI Emerging Market Index and leave out the Asian countries, what you end up with is, in fact, the second worst performing index over that period. What's performed better is the MSCI Emerging Market as a whole, which you expect because of the high exposure to Asia ex-Japan. And the MSCI Asia ex-Japan has substantially outperformed the emerging market index over a very long period of time. We quite proudly have substantially and materially outperformed the Asia ex-Japan index over that period and rewarded our investors for taking an active stance in Greater China and in Asia ex-Japan.
So what do you think the future then looks like for emerging markets, given that that Asian countries, particularly China, India, Taiwan, make up such a large portion of it, and particularly as they're moving from an export, or have moved in a lot of cases from an export majority-based economy to an internal consumer-based economy?
Yeah, really, that's a great analysis. And China has essentially already transitioned from being predominantly about exports to having an internal consumer market of its own. And if you think about it, China has been an extraordinary success story in terms of improvements in lifting people out of poverty. There's a middle class that's in excess of 500 million. There's heading towards 800 million. And when you think about a market the size, a middle class that will be 800 million in about 2 more years, that's an enormous domestic market that they can rely on to drive the economy going forward. And that story is happening in India. That story is happening throughout the rest of Asia. A couple of years ago, I had the great fortune I've had a few trips to Vietnam, and I went to Cambodia. And, it's easy over here to think that they're really, not backward, but their economies are behind. But their main cities are absolutely burgeoning cities with middle class. It's an extraordinary success story in the history of mankind, really.
For those who haven't had a read of the articles, it's a 2-part article. We'll leave a link in the description for those, and also they're available on our website. As always, thanks for spending some time with us. Much appreciated.
Pleasure. Great to talk to you.